read chapter 7 like 3 times and I still don't get it. What is cooperative society actually? Is it like a club or a business?
Great starting point, Ernie. But let's discuss this in the class.
Alright, let's go then.
Okay, Ernie, back to our topic before. A cooperative society is basically a group of people who come together to meet their common economic, social, and cultural needs. They all own and manage it together based on the democratic principle. It's kind of like a community business, but instead of focusing on profit for a few owners, everyone's benefit and every members get a say.
Our student cooperative society sells used book and provide printing services. We all contribute, vote, and we share any surplus we make.
Guys, I have heard you guys talk about cooperative society. May I add, legally, a cooperative is registered under Cooperative Society Act 1993. It is considered as chargeable person under tax law, just like individuals and companies.
Okay, so are cooperative society taxed like companies?
Not exactly, but that is where it gets more interesting. The cooperative society will get special tax treatment to support their community-driven goals.
When a cooperative society is first registered, it gets a 5-year tax exemption under paragraph 12, schedule 6 of the Income Tax Act.
That means for 5 years, the cooperative society didn't have to pay any tax at all, even if it makes profit.
Wow, that's huge. So what happened after 5 years? After that, the cooperative society tax status depends on something called members' fund.
Which is?
Members' fund, which are all of the assets and reserve that the cooperative society has from their members. It includes statutory reserve, share premium, paid-up capital, and retained profit. But it doesn't include things like asset revaluation or the depreciation provisions.
If the members' fund are less than 750,000 ringgit at the start of the year, the cooperative society still get the exemption.
But what if it is more than 750,000 ringgit?
Then the cooperative society is taxable and it still gets special deduction.
And when a cooperative society becomes taxable, they can deduct two things from their total income. The amount will be transferred to the statutory reserve, education fund, development fund, which the maximum amount is 25% of their profit, and also 8% of their members' fund.
This deduction reduces the chargeable income, which means less tax.
Let's say net profit is 700,000 ringgit, paid to Cooperative Society Education Fund 160,000 ringgit, Members Fund 860,000 ringgit.
Firstly, check if the transfer is under 25% of the net profit. The 25% times with 700,000 ringgit and it will be equal to 175,000 ringgit. But only 160,000 ringgit is allowed.
Step 2. Calculate 8% of members' fund. 8% times with 860,000 equal to 68,800.
Step 3. Total deductions equal to 116,000 ringgit plus 68,800 ringgit is 228,800 ringgit. The chargeable income is 700,000 ringgit minus with 228,800 ringgit equal to 471,002 ringgit.
Then apply the progressive tax rates to that 471,200 ringgit using Schedule 1. For example, the first 30,000 ringgit is tax-free, next 10,000 ringgit at 5% and so on.
Oh, so cooperative society that invests in education or reserve is actually pay less tax? Exactly, Ernie. That's the goal to encourage the community development.
Our student cooperative society reinvest in things like workshop and members benefit. It's not just about avoiding tax, it's about making an impact.
That was awesome. I get it now. Cooperative society are not just smart, they are powerful.
Cooperative, reinvest, and stay smart.
Let's recap. What is cooperative society? Cooperative society means any society registered under the Cooperative Societies Act 1993. It is incorporated under Companies Act 2016. The Act accords special incentive to cooperative society to promote their development for the benefits of community. Next, paragraph 12 exemption. Cooperative society is tax exempt for a period of 5 years commencing from the date of registration. Subparagraph 12, Clause 1, Clause A of Schedule 6 of the Income Tax Act 1967.
After 5 years of exemption, the cooperative society will get a tax break depends on its members' fund. If the cooperative society has less than 750,000 ringgit at the start of the year, it can still qualify for the tax exemption.
Next, what makes up members' fund? It represents the total equity contributed and retained by shareholders in the company. Firstly, it includes paid-up capital. That's the actual money received from shareholders in exchange for their shares, but it excludes any bonus share issued from capital reserve due to the revaluation of the assets. Next, we have the statutory reserve fund, which is a mandatory reserve required by law for specific purposes, like to protect their creditors. And then, there are other reserves, excluding revaluation reserve, such as those for depreciation or asset replacement. Also included is the share premium account, but we exclude any amount from bonus issued that tied to the revaluation gains. Lastly, we have the balance in the profit and loss appropriation account, which shows the retained earning, but profit will be kept in the business instead of being distributed as the dividends. Together, these components form the financial backbone of the shareholder equity in the company.
Next, when cooperative society taxable, it will get a special deduction under Section 65E. When a cooperative becomes taxable, it can deduct few things from its total income, which is statutory reserve fund, educational institution, cooperative organization established for the furtherance of cooperative principle, cooperative education trust fund, cooperative development trust fund, which is a maximum 25% of net profit and 8% of members' fund.
Advantages of cooperative society. First is ownership status. In a cooperative society, members aren't just customers or employees. They own shares of the business. This direct ownership brings a wealth of benefits. Members typically enjoy exclusive access to discounts and special deals. Beyond that, they often receive education, training, and a range of service designed specifically for them. And importantly, they participate in dividends, meaning they share in the profits generated by the cooperative. Next, we have the principle of those who give, receive. Cooperative societies aren't solely driven by the bottom line or maximizing profit for external shareholders. Their core mission is to serve their members, employees, and the broader communities they operate within. This means members aren't just passive recipients of benefits, they actively accept responsibility. These include essential aspects like voting on important decisions and participating in the economic life of the cooperative. It's a reciprocal relationship where engagement leads to shared success. Finally, a significant advantage is independence. Cooperatives are fundamentally independent organizations. They are controlled by their very own members. This means that major decisions, whether they involve proposed agreements, potential mergers, or significant operational changes, are made by the members themselves. The guiding principle for all these decisions is always the best interest of the cooperative societies and its members. This democratic control ensures the cooperative remains true to its foundational values and objectives.